Everybody, welcome to the Growth and Value class. My name is Mike Fairborn, sitting in for James Boyd today, folks, and we want to take a look really at comparing charts to fundamentals specifically, looking for correlations that we might see within fundamentals that do unfold within the chart. So we've got a couple of different ways to look at that, actually three specific ways. We'll be looking at consistency of revenues, earnings, etc., as well as projected earnings growth. And lastly, more of the value type trade that takes a little bit longer for prices oftentimes to catch up to what's happening fundamentally. So look forward to diving on into that with you all today. It's great to be in this class. I used to teach it a while ago, and it is good to be back to be able to be here teaching it. Welcome to all of you here today. Hello to you, Richard. We've got Gary, Dom, Josh. Good to have you all on board. We've got Sam and others here. We've got Connie Hill in the chat. Folks, any questions, comments you have, definitely throw those in the chat so we can address those for you. I'll try to keep an eye on that as well today, but definitely open to any questions that you might have, any comments you'd love to make. So with that, look forward to diving on into it. So let's go ahead and start off with our disclosures to get going here. All right, information here is for general information purposes only. Should not be considered an individualized recommendation or endorsement of any particular security chart pattern or investment strategy. Now, the paper money software application is for educational purposes only as well. There are risks associated with investing in dividend paying stocks, including but not limited to the risk that stocks may reduce or just stop paying dividends altogether. So investing in stocks involves risk, including the loss of principal, past performance, no guarantee of future results, and there's no guarantee that the execution of a stop order will be at or near the stop price. Okay, well, what we're going to do as well is put on a few paper trades too in our demo account as we go through each one of these. Just a quick look at the S&P 500 as it stands right now. So still, a big strong move within the S&P and holding up a big portion of that, we have to say, is technology. We're going to see some of those technology stocks kind of emerge from our discussion today that are really tying into the steadiness, the consistency of revenues going down to earnings and ultimately cash flows through moving their way through the financial statements. So as we look at this right now, just looking and stepping back at the S&P 500, we could see big picture. Obviously we broke above that 7,000 level, a big number there. There was a lot of resistance there. We extended higher, very, very little pullbacks here in this upward move, and we're still kind of just going sideways here. So we've seen accelerations in the market from time to time like this, and we're clearly getting a lot of this in the NASDAQ 100. So what we are getting is a fair number of companies within, let's say, the NASDAQ 100 that are displaying pretty strong and consistent revenue and earnings numbers, which is interesting because as we look at the NASDAQ 100, that's what's really behind the scenes here. And that's what makes up this move here that we're seeing on these charts. Not to mention AI, innovation, expansion, and productivity certainly play a key role behind the scenes. But let's do this. I want to start off first by just taking a look at a company within the NASDAQ 100, also within the S&P 500, but let's look at Google here. All right, so as we pull up Google or Alphabet, you can see us in here. We're just coming off of a little bit of a bounce right now off of Google. And some would say, it's maybe on target to be, we'll go full screen here, target to be a potentially a close above the high of the low day, a hold it. We're not there yet. The day hasn't closed, but there is your little moderate pullback and there is your bounce. Now, will this continue on up higher? That's interesting question. And the key thing here is we're talking about fundamentals. What fundamentals behind the scenes could be operating here? I mean, do we expect, let's just say, for example, earnings to be going like this? Or is there something there that's raising the value of this company over time? A good quick way to look at it, just using tools right here off of the Thinkorswim platform. Folks, just go to Analyze tab right here. Under Analyze over to the right, you can take a look at earnings. And this is beautiful because it does give us a bar over here at the bottom. And this is just EPS. And so we have this reference point as to what earnings have been doing. Now, this just gives us a sense, do earnings in this case, do they coincide with the stock trend, and in this case, to the upside, the uptrend? We're actually comparing these earnings. In fact, let's do this right now. I'm going to just take this out. But Wall Street estimates, you can see that it was beating Wall Street estimates, but there is the push right there. We did see a pretty big spike. Now, in earnings right here, did we see a pretty big spike on the chart? We're just one click away from comparison here. There you go. Do we see maybe a change in earnings? The anticipation of higher earnings? Yes, here was the earnings date. We actually began to run ahead of earnings there, as you could see, but clearly what appears to be a beat on earnings. And yes, that's a big beat. 2.63 relative to just over $5, 5.11 right there. So we saw really kind of the power of earnings push, potentially lead prices higher. Is it always exactly like this? No, but oftentimes it is. There tends to be a correlation, specifically if you have this consistency over time. And we have been growing that earnings trend. This is the trend on earnings on the chart over time. A great way to see it, right? Right off the chart itself. Let's do this. This is actually this is 8 quarters, so a couple years. Let's go ahead and just do justice to the chart over here by comparison. So there is your 2-year chart. Okay, generally speaking, how were earnings doing over here in this range? And how are earnings doing over here in this range? Let's reference it back and just take a look at the chart again. Earnings somewhat flat. They were still growing off the bottom. And by the way, the stock chart too, folks, was still moving off the bottom as well. But we did see an acceleration, didn't we? We saw a higher low on earnings. We actually broke above an earnings line. If I can draw that, there we go, right there. And we broke higher expected earnings. And by the way, we did deliver on those earnings too. What happened with share prices? Folks, this is great because it's a great reference to have here. Now, as I was saying before, we could say that, let's say, for example, a price coming down like this might be indicative of earnings also showing some weakness generally too. So what could we say about that? I mean, let's pull up another company, one that maybe has not been doing as well, not been faring nearly as good, just in terms of its 2 year. Now, here's a company called Baxter. There's a 2-year glimpse of its chart, and you can see pretty poor results in terms of what we're seeing with Baxter, right? Not good to the downside. Well, let's do this. Let's come up here and just reference this real quick, and we'll see where we're at. We'll go right up to Analyze tab, and we want to look at the same comparison over here. There are your earnings. And the thing we can say with earnings here too is, yes, generally speaking, they are to the downside. Again, looking down here, EPS, a little bit smaller, but it's right at the bottom. You can always compare this to, I do have the trend lines on as well. That's checked. That's why we're seeing connections between these points here. But notice this, the acceleration to what? To lower levels. Folks, we were breaking lows here, earnings lows to the downside here. And as you see that right there, you see prices coming down or earnings coming down, folks. That's a pretty substantial dip, at least for the past 2 years. Well, there's the chart right there to the downside. Now, this could start to turn into a different type of a trade. Some traders might look at this as potentially a turnaround type scenario or setup, but that's what you're getting right here. So who knows? But all we could say is that it did follow the earnings trend down. Okay. This is something I can actually build in ThinkScript. So if anybody is interested in this, let me know in the chat. I can actually build something like this tomorrow in the class where we're actually getting earnings overlaid on the chart. That might make it easier than going even over here. And I think I can go back like 5 to 10 years as well. So let me know if that's of interest. We could definitely slip that in, if so, into that chart. Okay. So maybe that's a good time for me to pause real quick and just state over here, folks, be sure to follow us, give us a follow on our Trader Talks channel here. Just over about 196,000 subscribers. But if you're not already on board, love to have you follow us here. We do have a number of playlists here. You can see Connie down here teaching a number of classes, but here's a list of all of the coaches down here in the classes we teach. These are the playlists going back, months and months within each class. So I encourage you to do that. All right, as well. Okay. With that, oh, by the way, yeah, that ThinkScript class is at the bottom, generally down here too. So if you want to take a look at that, we can add that in tomorrow as well. That earnings trend. Okay, I think we could possibly do even a revenues trend as well. I'll have to look into that. All right. Well, the next thing we want to do, and one way to get a better sense of this correlation are, how are the companies comparing, relatively speaking, as it relates to a basket of stocks. So if we were to go into, let's say, for example, Schwab here, and I'm going to sign in again. Looks like it signed me out. The Schwab demo account, what we'll do is get into that right now, and I'm going to pull up a search here so we can find kind of those larger baskets of stocks that might correlate to what we were just looking at, folks, which is consistency of earnings, revenue, or cash flow. I'm happy sticking with earnings though. So let's do that first. In fact, what I'm going to do right now is just go into research, the research tab up top, go to stocks. With that, what we'll do is we'll go into the stock screener right here. Okay, next up, we'll go into basic, and I'm just going to select from the index here, an index of companies. There is the S&P 500. Now, within that too, I'm going to show you how we can isolate it if we wanted to. We can look at the S&P 500. In fact, let's do it this way. I'm going to show you now some of the earnings growth over the past 3 years. Now, this is going to be kind of higher growth, the 15 to 20% area. But again, what we're looking for is the consistency like we just saw on that trend. And that's something like this. I'm just drawing the earnings, kind of an earnings curve. I don't know what I was doing over here. They're more just like, for quarter to quarter to quarter, right? We're trying to find something moving to the upside. Now, some analysts, in fact, I've read through this, a number of analysts might look at maybe a 3-year time frame. And if they're looking for growth, they might choose anywhere between 15 and let's say 15 and 25%. I've seen it as high as 30 actually for growth on an annual basis. But what I want to do is we'll just say greater than or equal to 20 in this case, which is kind of a middle range in there. That's still high growth. And what we're basically looking at here is we've got, 4 quarters, 4 quarters in that year. And so if it's 20%, we're looking at what? Approximately 5, 5, 5, and 5 across the board, right? 5%, 5%, 5% to get us to our 20%. So what I'm trying to show you here is there's consistency of those quarterly numbers. In other words, if we're approximately, it doesn't have to move this way, but I'm just saying approximately at least 5%, right? We might be seeing a general direction of a move like this to the upside. And this can help us kind of find those groups of companies. So let's do this. We've got this in here, we've got 100, but I'm going to do one more area to kind of tighten this search up a little bit. I'm going to go back into basics and I'm going to go into sectors and industries. And what I want to do here is just simply go into information technology right there. I'm going to put everything in here, maybe except software. Software has really been taking it on the chin. It had pretty good growth, but that growth has begun to kind of waver quite a bit. So keep in mind, I am narrowing this down from basically 500. We're down to 10 now. So it's a very small basket, but again, we're just looking at technology X software here. Okay. And those are our matches. So I want to pull these up right now and just show you how some of these comparisons might work. This is technology. We can look in other areas too. They're not going to be as strong as technology because the growth hasn't quite been as strong. There's your 3-year growth. Clearly, all of these folks beating that number at least. This is our lowest one, AVGO, which I think is set to grow further projected earnings wise. But right now, the last 3 years, about 20, just over 20%. That's fine. That's what we were looking for. That's relatively strong growth. Many of these, doubling that or even more. So let's pull it up and just look at some of these right now. So there's AMD. I do want to look at AVGO as well. But here is that AMD. Okay. pretty strong growth. We were looking at it over the past 3 years, and right now we're just looking at historical growth to kind of give us a projection of where we might be heading going forward here. Okay, now there is one other addition we can do. We can make a comparison here based on a, let's say, for example, an annual basis, excuse me, a quarterly basis. So we can come over here as we're looking at this on our 20-year historical, but we can narrow this down, excuse me, 3-year at 20%, not 20-year. I'm used to pulling up 20-year on the charts. It's a 3-year, 20%. I'm going to come over here into my additional numbers, and we could do something like this. In terms of, trailing 12 months, so we can also narrow this down over the last, let's say, year or so versus 1 year ago. So what do we have here? And is this also, I'm just going to apply it. I'm not going to require it. But now you notice we have an additional, let's see, I applied it. There it is at the bottom. So it's over here since I added it last. So now this is a comparison to kind of show you, wow, if we're looking over the last year, we know some of these are doing okay 3 years ago, but how are they doing more recently, as in the last trailing 12 months, TTM? Wow, some of these are really quite strong. AVGO, one I was just telling you, that was just over 20%, 140, close to 140%. AMD, right there. Very, very useful to have this in place. Now it kind of brings kind of a little bit better understanding to have a column like this in place here too, right next to this. Let's say, for example, you got your 3-year, you got your 1 year. How is that comparing? Well, there's some pretty good growth over here. You can see over the past 1 year time frame, yeah, there's a totally different change in that underlying trend, right? Higher highs, higher lows, breaking above a long-term range over here, testing back on maybe some long-term prior highs, and then taking off. All right, and that's the pretty big explosive move that you're going to see happening right there. So a pretty good number and projected numbers as well. Let's go through some others on that list. AVGO. Okay, pretty strong over the past 1 year. Okay, yeah, trailing 12 months. So I'm going back basically to last April timeframe. You can see actually from here, we actually spiked and we just cleared some prior highs here, coming back down to that 400 level. Now here's another one here. We had in that same list, Dell was on that list. And then we also had one to the that had kind of been down. It spiked early, then came down, but also quite strong, Oracle. I mean, in terms of earnings. So what could this mean? Well, if you have earnings that are continuing, if those earnings continue to climb, it could be, somewhat pressured to continue to rise higher here. Off the bottom, we do see a couple of different points, higher highs and higher lows over here. This, I think, still does fall a little bit more into the software area, although they've expanded in different areas aside from, some of the pure plays in software. But that is one to look at as well. I'm going to go over here just for our sample trade. I'm going to choose this AVGO. It pulled back a little bit. It's held along this prior high right here, as you can all see. So see, we've broken above this range and we're kind of going flat in here. Maybe a little, I'll even zoom in on this because this is a 2-year chart, but you can see over here, here is your pullback here. A little bit of a hammer pattern right now. Of course, the day's not done, but perhaps resting on a range. This is one that maybe hasn't taken off just as fast as some of the others. Like say, for example, AMD. I mean, somewhat of a different area too, but there's AMD, Intel. Um, let's see, how does Cisco? Cisco's even a little bit ahead of it. So AVGO maybe slightly lagging. We're just maybe on, if it does have an additional leg, we're just on the first leg here. So maybe it can run up a little bit higher over here. So let's go ahead and just put a sample example trade on here. Just a basic one. And what we'll do is we'll put maybe the stops below this 400 level, maybe in this range over here, just anticipating that we might go sideways and break out. So as part of our discussion here, we do want to go through and play some paper money trades. This is kind of an expensive stock, so we'll put it down at a little bit We'll reduce the number of shares. Okay. So good till cancel on our stop and the limit orders over here. I'm going to just put this down to 25. Okay. Even from a round lot, we'll just take a quarter of that round lot over here. We'll adjust the upside. This upside could be quite high if it does follow through with, let's say, a larger term flag pattern. What I'm going to do is show you how to just do a quick adjustment here. 430. I'm just basically putting in about 15 points, and I'll put this down below that 400 as I was showing you. I'll say 399. Okay, confirm, and then we've got it set up. I'm going to send this on through. So here we have it. Now, if this was in fact a longer term flag pattern, it could be quite a big move. We're just kind of going sideways here. There's the fill. There is the first portion of the flag. Now, what we can do to measure our projected target to the upside that a lot of traders will use, I'm just going to go ahead and just duplicate the drawing and pull it up from over here and measure it off the low there. And that's somewhere near our upward target. I'm going to drag up our limit order up top here and put it just real close to that range right there. And I'm kind of just set with this. So you can kind of see here too on a trade like this, using once again, strong earnings growth historically. And over the past year, an acceleration of that growth with the anticipation of it going higher with this tech rally and maybe even holding using the chart here, technical analysis along a sideways range. Sideways, that is, folks. Okay, through there around 400, and the possibility of this coming up. And a lot of times it's just interesting to compare potential risk and potential return scenarios. If we were able to get out near the stop, that's somewhat of the risk level right there. But on the upside, what does that upside target look like? Clearly, a higher potential reward based upon this trade right now, right? Upside versus downside quite small. Okay. Well, folks, that first scenario there, take a look at the chat here, but the first scenario was just looking at the comparison. So strength in earnings. There's also strength in revenue, as we mentioned, or strength in cash flow. We can also see some of those numbers over here. I like the Analyze tab, but if we go into fundamentals, we can come down here and just scroll down and see this on an annual. Now, the quarterly doesn't look nearly as good. You can get some numbers here. And by the way, you do get this as well, which is nice. And it does go from left to right, which is different from Schwab, by the way. Schwab goes from right to left, but this is left to right, as you can see. And so you can look at the bars over here, earnings per share as well. What are we seeing? A major spike over there. I personally do like the lines on the charts, but there you go. Okay, so there was some interest in getting that. So you guys, tomorrow I will build that for that ThinkScript class, and we'll pull that up and hit that. Okay, so we'll have that on there so you guys can carry this with you. I think that's ideal for a class like this because you guys are focused in on that investor aspect, right? Value and growth combined. So with that, let's do this. Let's go ahead and go into our next area. So as we talk about the next area, I'm going to go ahead and just use a blank screen here to kind of highlight this. We were just looking at the consistency of earnings. And when you have a historical consistency of earnings, I'm drawing the earnings line in here, it can correlate to share prices and it can move kind of with share prices. In other words, one is strong and so too is the other. This would be the stock up here. And of course, the earnings, which has its own trend we just looked at. Now, there is something in addition to this. We can get that on Schwab. We don't have it on Thinkorswim, but we do have it on Schwab, and that's this. We have a projected earnings number. So we've got projected earnings. So we've got something like this where you see earnings historically has been strong. It's been growing. But then we're looking over here. I'll just do like a dotted line to kind of highlight this. But if we're getting this, this is all projected. So it kind of tops. And we're saying, hey, for the 1 year time frame, whatever the case might be, is from this point here. This is into the future, okay? Right over here. This is into the future here, but this right here is the current earnings. This is where current earnings ends, and now we're using an earnings projection. Now, a lot of times traders will look for something like, they might still use like a larger basket of stocks that they're familiar with, the S&P 500, for example, but something like a 20% growth year over year would be something that they focused in on as well. You might see that YOY year over year, and what is basically saying is we're going to be comparing on a projected level. Key point. It's not guaranteed, but it's projected by the analyst. And a lot of traders will say that if you could perform uh, fairly well historically, then you might have a better indication of also being able to do it in the future too. That's why when we run these searches, we also have a 3-year in here, for example, a 3-year or 5-year, whatever it is, historical data, but then also a projected 1 year over here to kind of show us where it could be heading in the future. Okay. But that's a year over year. You'll also see it, like, for example, I've seen it Y/Y, year over year. All right, well, let's do it. Let's pull it up. We'll get it going right now in our search. Okay, so what we're going to do is we're going to kill all this right now. In fact, I'm not going to worry about technology or anything in this case. So I'm going to jump in over here. We're still going to use the S&P 500, and we're going to use our 3-year growth. I'm going to narrow this down a little bit, though. I'm just going to say 15. Well, actually, you know what? That's okay. We'll give us 100. This gives us 100 stocks out of our list. But now we're going to add in the projected number, okay, so we can see where it could be going, where analysts are projecting it to go forward into the future. Now, one thing I want to say is that a number of executives that are within S&P 500 companies, sometimes, not every time, but to be an executive in the S&P 500, sometimes they're pretty good at understanding numbers. They probably have a good team. And in certain cases, they might even be better at projecting their earnings relative to, let's say, small cap stocks too, which could be another reason to use something like companies in the S&P 500 that have requirements to get into that group in the first place, right? And I mean, you have to say an executive on the S&P 500, well, maybe they know a few things. So anyways, this is our history here, and we're just looking at, increasing the projection going forward. I'm still going to use the 20%. So let's scoot on down here. We are simply just in company performance right there. So we've got that open still, and we're going to scroll on down into the estimated growth. Now, this is really important. I just showed you folks going out 1 year, everybody, right? A 1-year time frame. Next year versus the current FY. And the current FY is the current fiscal year versus the next fiscal year. Now, a lot of times traders will use the next fiscal year relative to the current fiscal year. In other words, they're saying, hey, what is expected into the next year time frame? So we're actually going out a little bit further, but this one tends to be maybe a little bit more. Here we go. Current year. Wait, I'm sorry. Next fiscal year. I want to know the next year. Yeah, right here. It tends to be a little bit more reliable, you could say, or less overly optimistic, or whatever the case is, relative to the 3 to 5 year. That's a difficult time frame, especially in technology type companies where things are changing so quick. But oftentimes you will find uh, analysts, getting information from the executives of the company going out for the next fiscal year. So let's click on this one right here. Just want to give you a little bit of backdrop while we're choosing it. Okay, so I'm going to enter a specific value. I'm going to choose greater than or equal to, and I'm going to choose the 20 number right there. Now we've only got 17. So think about that. We went from 100 down to 17. But again, we're saying here, this is where we think that a projected earnings number, projected, could lead prices higher into the future. Stock prices, because it's projected to go higher as well. Okay. Here is your list right here. Now, I did make it kind of tight. I'm going to do one thing. I'm going to give us a little bit bigger basket of companies to look at here. Let's just do this. All I got to do is click on that little area, go to 15. So, oh, we only added one. Okay, so we didn't add too many in there, but there you go. All right, so let's do this. We've got Delta right there. Last 3 years, it's grown at 54%. This year, excuse me, into next year, it's expected to grow at 45. Now, you say that's interesting because there is that oil component in there, and we know the situation, the scenario in oil. So I have to say that's kind of a little bit of a wild card. By the way, AMD is also coming up again. So just be thinking about this as we are looking at this column here. Projected, right? This is projected. This is historical. As we are looking at each of these, this some traders and investors will say, it can give us some insight as to where right over here, the stock trend could go in the future. We're focused in on projected numbers. And by the way, many of these are clearly above that 20%. But let's compare it now to a chart. Here is Delta popping up. There's Delta on our chart right here. Okay, so something you could look at, even if I just look at the chart, we'll go to a 1 year because we're looking at a projected number over this time frame. But something interesting is happening here, and that is this. We are seeing the stock approaching a resistance level up top at 75, kind of one of those bigger numbers, perhaps, kind of like 50. Sometimes you see stocks bounce around 50. There's 75, maybe 100 as well. But we're seeing kind of a trend going up, and I'm seeing actually here, if I can draw this, a bit of a right angled triangle is what we refer to this as. It's marked by similar highs. The highs are very similar, but higher lows, and oftentimes can be an indication of a potential setup for a bounce to the break side. In other words, to finally break above that level. You're getting higher. The trend is progressing, maybe not off the top so much, but maybe it's reaching a point where it could break out high. Now, I'm not sure how you feel about this because there is that oil component, but I'm just showing you in terms, folks, of the numbers. We could be seeing something there too. And by the way, Barb says, yeah, reverse head and shoulders as well. Just caught that, Barb. Good catch. She's referring to this over here. Shoulder, head, shoulder. Since we did that, and the beauty of price patterns is that it can give us a projection to the upside. There's your shoulder, head, shoulder. If we break above the neckline, which is that nice level right around 75 there, what we could potentially see on that is a distance between here and here. So that would be the projection to the upside. Ooh, do we even have it? Geez, it's getting close to the 100 level. I've actually got to do us justice. I got to pull it down a little bit. I got to take that off first. There we go. And I'll do one of these for us. So let me just draw this line. It's so nice to use these Thinkorswim tools just to show us some price patterns right there. Right here. Click and we'll duplicate this guy. We'll pull it up right from that level. Ooh, very close, getting to 100. Some traders will say, by the way, if you get above 95, this doesn't happen all the time, but if you get above 95, oftentimes prices are sucked up to 100. I've seen that. I've also not seen that. But yeah, it's just something that can happen. Anyways, that's one to look at. Another one over there, GLW, Corning. Bigger projected numbers going forward. This was the $3.2 billion investment from NVIDIA right there, just as a side note. That was in the news last week, so I caught it. Sent a little tweet out on it, but there you have it right there. Could that, help prices go higher? This too had been flat for a little while and down here too. So these are some interesting ones. Now I'm going to go ahead and just put that example trade on Delta while we have got it here. That's not Delta. This is Delta though. We can put that up towards that 100. It just, again, there is that, I want to just say that the oil dynamic out there that kind of puts things in question. But so far it's been holding up well. You'd have to say if the price of oil dropped, it may actually help this company. But this is kind of the potential path or runway for it, maybe up to near 100. I'll just put 98. I don't think it was quite at 100. You could look at it towards that level. And I'll put this one down about 68 for our potential exit on that stop. Okay, so let's click on it. We'll send it through and we'll look at the charts and adjust this one as well. So again, folks, projected earnings going higher. And what was that number looking like? Well, it was right there. Delta, 45% projected earnings next year. Now, could that lift valuations higher? Answer to that is yes, it could. Anytime again, we're looking at earnings, and if there's an expectation that earnings could go up, what does that do? Let's just stop and think about this for a second. What does that do to the potential underlying value of that business? If the company is, capturing more of those earnings and they're holding it, is the value not going up too? Yeah, it could be. And that's really one of the big correlations you'll find with fundamentals is that correlation there. By the way, yeah, let's take a look. CB says, Gilead, yeah, I'll be happy to take a look at that. Let me just do a quick adjustment here. I think we got our upward. Oh, that was too high. Okay, so I'm gonna just drag this down, put it closer to the actual projected number. Again, so well, close to that range, I'm gonna lift it up just a little bit more. There we go. Easiest way in the world, folks, to adjust these. How do you feel with a stop like that, an exit point? Again, a potential exit level, as we read earlier in our disclosures, not a guaranteed to fill at that price, but you know, could be near that level. Some might say here, and some might actually just put it right below the last low, thinking that maybe it'll make a move above 75. But this is an interesting one to keep an eye on, nonetheless, right? As we're kind of looking at this here. So let's do this. Yeah, Gilead was on that list. I've got one more group to take a look at too, which is kind of the undervalued aspect. We'll do that in the last few minutes here, but there is Gilead. I like to look at kind of compare those weekly charts as well. One thing you'd have to say with Gilead is that there is this big upward move and a big pullback, and by the way, a nice follow through. Big upward move, big pullback, and are we starting to see the beginnings of a change right there? Interesting. Actually, do we have a close above the high of the low week? There's the low. We didn't get it last week. Interesting, isn't it? You did not get it to close above the high of the low bar. So here we are right there. Okay. We like to talk about the Caholds and the weeklies as well because hey, that's what JB takes a look at a lot, and he's into that. But hey, it could be the beginnings of a scenario there. One thing that traders might look for too, just looking at the chart because you've got the projected numbers in there. I saw you'd written down the projected numbers quite high, but if we come over like this, I mean that's a prior high, right? Excuse me, a prior low. A lot of traders like to see the trend turn to get above that level right there to at least start the trend. Kind of the way that Oracle looked along the bottom. We don't know what'll happen with Oracle, but I'm just saying this kind of a general trend off of the bottom right there. Okay. So with that, yeah, kind of a longer term, sort of a flaggish type pattern. Let's hit our last one. So we've hit two thus far. We saw strong correlations with existing earnings, revenues, or cash flow. We chose earnings specifically. That consistency leading to higher levels, along with a more recent view of yearly prices. And then we also took a look at projected earnings going into the future and how something like a projected number over here, remember, higher potential value. And by the way, we also put in there a historical view of earnings to give us a sense that, yeah, hey, they've done earnings before at higher levels, and that's in the books. Now, can they do it again? Maybe so. Uh, could that help to lift prices on a projected basis? The last one we're going to be looking at is the value. And I'm really kind of looking at growth at a reasonable price here, or also known as the acronym of GARP. GARP investing, growth at a reasonable price. I'm going to use today a little sneaky way to get into it. Jumping right back into Schwab, I'm going to take a look at the PEG ratio. Before I do that again, though, just a quick note, folks, if you're not following us yet on Trader Talks on YouTube, encourage you to do so. Love to have you on board here. 196,000 plus subscribers right now. You get access, free access, we like to say, to the playlists, etc. on down the line. A lot of great information here. Oh, this class, by the way, the swing trading, I do a lot of price patterns in here as well. Connie's got some great classes. Straddle Strangles, advanced option concepts that are really in depth and fantastic to take a look at too. But encourage you to do that. Also, be sure to follow Connie and I on X, Connie Hill CS. I am Mike Fairborn CS as well. We do post earnings and updates and different things along the lines there as well, just to be mindful of. Okay, so with all that, let's go ahead and hit our last one quickly. All right, so up top, we're still going to use the S&P 500. And what I'm going to do, I'm going to sneak through this. I'm just going to show you a PEG ratio. We're going to go under valuations. The PEG ratio combines projected growth, but it's also looking at, oh, where are you? There you are. Projected PEG ratio right there. And I'm going to say actually less than one. Ooh, how many we have? 38. What's happening is we're seeing 38 companies out of roughly 500 on the S&P 500, okay? What we're looking at here is we're saying it's a PE ratio divided by projected, folks, projected growth into the future. Projected growth. And that projected growth is going out in time. What we're doing simply comparing is what does the PE look like? What are people paying for the earnings of a company relative to the projected growth? If it, folks, is less than one, that tells us that the PE ratio, let's just say, for example, is at 20, and the growth rate, projected growth rate out into next year, which is the way that Schwab does it, is 25. Do you see how that's undervalued in this scenario? PE up top, projected number down below, projected earnings growth for that upcoming year. If it's higher than the PE ratio, it's less than one. And what are we searching for? Less than one. And how many views, how many do we have? Right here. So this could be considered growth at a reasonable price. Let's see what companies we're getting on this list. And they're going to be different, pretty sure, than some of those tech stocks. You know what else is on there? Fascinating. Delta Airlines, 0.69. And does that make sense relative to what we just saw before? What did we just see? We just saw a company that was kind of holding at a lower price, relatively speaking. Now we can see that kind of doing an upward right angle triangle, but there might be a big value component here because the PE ratio is less than the growth rate. That's what the PEG's giving us right there. So a breakout here plus that projected number could mean a move to the upside. So that's when we could kind of take a look at another one right there. Look at that, EXE, 0.32. Wow, that's really quite low. I'm just pulling it up because it just pulled up right on our scan here. EXE, there you go. Oh yeah, I mean, that's really, that is low, relatively speaking, compared to its PE ratio. So its expected growth rate substantially higher relative to where its price is at right now. Folks, I hope you got some value out of our discussion today. Speaking of value, went through those three components, put in a couple of example trades in there, but it has been great being here with you today. And hopefully this was helpful to tie in those fundamentals to the technicals, as there are clear and interesting sorts of comparisons oftentimes. So with that, everybody, be sure to subscribe to our channel, and we will see you all next time. Thank you so much, Connie, for your help in the chat, and great to be with you all. Take care, all. Bye-bye.